Hello, welcome to AleaSoft webinar. My name is Alejandro Delgado, Technical Director of AleaSoft and Associate Partner of Alea Green, and thank you for joining us today in this webinar with the topic Prospect for the Energy Markets in Europe, Spring 2024. Our first speaker today will be Oriol Saltó, Data Analysis and Modeling Director of AleaSoft and Associate Partner of Alea Green, that will analyze the evolution of the European energy markets. Then we have several speakers from EY sharing this session with us for the fourth consecutive year, and that we talk about several interesting topics like regulation and prospects, financing of renewable energy projects, the importance of PPAs and self-consumption, portfolio valuation, green hydrogen auctions, and innovation funds. They are Marta Sánchez Álvarez, Energy Consulting Leader, Javier García Seijas, Partner of Infrastructure Modeling and Project Finance, Alfredo Salcedo Rivas, Partner of Strategy and Transactions, and Jaime Moretón Poch, Director of Business Consulting. If you have any questions at any time during the webinar, please use the Q&A menu, and we will answer them after the presentations. And now, I hope you enjoyed the webinar. Oriol, please, share your slides.
Thank you, Alejandro. Good morning, everybody. So I'll start right away because today we have a lot of invited speakers, and we want also to have time for everybody to speak. So as always, I will start with a brief introduction of AleaSoft and the services that we provide in case you don't know us. In AleaSoft, we provide, forecasting services for the energy sector. We are covering all the energy markets in Europe. This map is getting a little old. We are also covering now markets in South America, also some markets in North America, markets in the Middle East, and our goal is to expand globally to cover all the energy markets at the global level. We forecast any variable that can be interesting for the energy sector. Obviously, demand and prices for gas and electricity markets, but also not just spot markets or day-ahead markets, but also futures market, ancillary services, and any variable that has impact into markets like renewable energy production, fuel prices, CO2 prices, and not only, let's say, deterministic forecasting, but we can also provide hourly price forecasting at the long term. We provide solutions for any player in the energy sector. So we are providing from consumers to producers to investors, traders. So basically, any player in the energy sector at some point they will need forecasting services. About our methodology, the 3 points that we always like to stress is that it is a completely scientifically based methodology. This gives the forecast robustness and consistency. They are accurate and they are very stable. That is one of the main characteristics that our clients appreciate about our forecasting, their consistency and coherency over time. And well, is the forecasting methodology that we have been using for more than 25 years now. This year we are celebrating the 25th anniversary of the company, and we started in the Iberian electricity market and now covering, as I mentioned, energy markets at the global level. Aside from forecasting services, we also provide market integrator services. Alea Green is the long-term division of our company, and as I mentioned, have clients from both sides, consuming and producing electricity. In a kind of a natural way, we started providing these services, putting in contact both sellers and consumers of energy to sign a PPA, or sponsors that want to sell renewable energy assets to some investors that want to buy these assets. So we as I mentioned, we provide we are a hub for PPA, so off-takers looking for projects or projects looking for off-takers, and also putting in contact buyers and sellers of renewable energy assets. Okay, So let's start our review of the energy markets in the last weeks. Last webinar, it was 4 weeks, exactly 4 weeks ago. So, and we always start with Brent oil prices. Since our last webinar, we mentioned that the prices were in an upward trend, but at that time we said that we saw it very difficult from prices going much higher than that. We were putting some kind of ceiling, some resistance around or before $90. Prices have been below $85 since then, and it looks that this is the new ceiling. So basically, prices now look quite stable. So and here we have two views on how the market is going to evolve right now. From the producer side, so the OPEC countries, OPEC plus countries, they are basically seeing a balanced market between energy and between demand and supply. They are seeing a balanced market, and since they have production cuts in place, they are expecting, or they say they think that the price, a more realistic price, should be much closer to $90 per barrel. On the other side, we have the International Energy Agency that is saying that demand is growing really slowly. So they see a surplus or an excess of supply, at least for all 2024. So they don't see prices going up. If they do something, they will go down. So these are the two views of the market right now. Sorry. From the International Energy Agency, they show how this is the growth in oil demand for the last quarters, and you see that the growth has been decreasing, and they see that for 2024 the rate is going to be just half. The increasing rate is going to be just half of the one from 2023. So they basically see that well, we have a slowing, the demand that is growing very slow. We have from the producer side, we have countries that have production cuts in place, but there are other countries outside OPEC, mainly in America, that are producing a lot of oil. So basically, they see that there is too much oil. So if prices do something, they should decrease at some point. So basically, difficult to say what is going to happen in the following weeks, but it looks difficult that prices will go much higher than the actual levels. Some probabilities of prices going also a little down, but the scenario, it's more or less around 80, little more than 85 maybe, but no radical changes are seen in the coming weeks, aside some new geopolitical conflict that can arise at any moment. Okay, let's move to the gas. The situation is a little bit different. Basically, what we are seeing now are prices that are relatively stable, and it looks like we have reached our new equilibrium, and this new equilibrium, it's around 25 euros per megawatt hour. This is where the prices reach in mid-2023, and after increasing at the beginning or by the end of 2023, they are now back at these levels, and they look comfortable at these levels. We will look at the futures afterwards, but basically the futures are telling us that this is the new equilibrium price. So we should see prices from now on more or less fluctuating around this new level. We are already living or in the last part of the winter. The weather has been really mild in these last weeks. Basically, we have a lot of storage, 60% full, and we are nearly the end of the winter, so we are close to the beginning of the refill season. Sorry, we are a little bit better than 1 year ago, but basically at the same level. So it's difficult to see new increases in prices by the end of the winter. Again, any disruptions in the LNG supply at the global level can have an impact, but at least from a normal situation, a normal weather situation, we are seeing no problems until the end of the winter. Looking at the CO2 prices, in the last webinar, we saw how prices were getting closer to this $50, 50 euros per ton. And we said, looking at the historical perspective, that this was one important level because it was the prices at the beginning of 2021. We have seen a rebound in the prices. Is this how far prices are going to go, or they can go even lower? At this point, it's difficult to say if this is really a change in the trend, or it's just a pause in the decreasing trend. We were seeing in a historical perspective that if we can understand that this past behavior of the last 3 years was just an anomaly, maybe this 50 euros per ton were the point where the long-term trend of these prices was. So that could be an important change when the prices could just summarize their long-term upwards trend. We cannot say this is the point right now, but maybe it looks that at least prices can stay there for some time. Now, about electricity markets, I always take this opportunity to show our online database. It's a service that we offer to our clients. It's a database containing all the all the information relative to the electricity and gas markets. Basically, we group them in what we call observatories, that markets by countries or by regions or by type of data. So here, what we can see are the main electricity markets in Europe: Italy, Germany, Spain, Portugal, etc., France. And this is the monthly average since 2021. So the last full month that we have is February. And in February, we saw that the lower prices are in the in the Iberian market, in the Spanish and Portuguese market. Their prices decreased by 46%, nearly 50%. In the rest of the countries, France, Germany, Belgium, UK, the decrease was around 20%. And then Italy, that is the market with the highest prices decreased compared to January by 12%. If we look at the prices, at the daily average for the prices since the beginning of 2024, basically we see until mid-February, more or less, we see this decreasing trend. This is associated with the decrease related with the decrease on gas prices. And since mid-February, more or less, prices are relatively stable. We don't see a clear trend. What is interesting, as always, most of the markets are coupled around 60, 70, 80 euros per megawatt hour. Italy always with the higher prices, closer to 100. And then we see Spain and Portugal here having very low prices. If we take a closer look at these markets, the Spanish market concretely, here we can see electricity market prices in blue. You see how since by the end of February, we started having very low prices for a lot of hours, some zero prices even. And this is related, as you can see, with the wind energy production that is in red. And you can see how episodes and hours with very high wind energy are very related with hours with very low prices. Also in orange or yellow, Here you can see the nuclear energy, and these decreases are not scheduled shutdown. Sorry, they are voluntary curtailment. So it's a spring. So the demand is, well, we are closer to the spring. The demand is really low, and with so much wind energy and also solar energy is already increasing. We are heading already the summer. We don't need so much energy. So there are reductions in production in the nuclear energy. And we have had a lot of questions from our clients. I'm sure some of the questions in this webinar are also going to be related to these very low prices. How worried we have to be seeing so much hour with so many low prices, how this is going to impact the return of our energy projects. I just want to put some historical perspective in this behavior. We can go one year ago. So if we go to 2023, this is from January to March 2023. Sorry, this is 2024. This is what we are seeing right now. If we go to 2023, okay, this is from March to May in 2023, we see a similar situation. So a lot of hours with very low prices. 1 year ago, we were also receiving a lot of comments, a lot of questions about how worried do we have to be about this situation. Is this going to be the whole year is going to be in this? At that time, we were saying here we're having particular conditions very related to the mild weather, low demand in the spring. So nothing to worry. And well, the 2023 ended up with captured prices for the photovoltaics around 55 euros megawatt hour. So nothing to worry. Very, very high prices in this sense. But you can say, okay, 2024 is a little bit worse than it was in 2023. Okay, so now I'm going to do something crazy. I'm going to go back to 2014. If we go back to 2014, this is since February and March, and you see pretty much the very similar situation. So very low prices, several days with very low prices, and then some days also having very low prices close to zero, some prices even exactly zero. And we can even go back to 2013, 1 year ago, from March and April, and you can see pretty much the same situation. Even more than 24 hours in a row with price zero. So the situation was even worse in some particular days. So at that time we were worried, but yes, people was worried, but we were basically we have to understand that this is a particular situation, very common in the Spanish market, mainly in the spring. The spring we have relatively mild weather most of the years. Very low demand. We usually have also the Eastern holidays in this during spring. So also the period where the demand is much lower in Spain. So if you combine all this with very high wind in spring, it's one of the windy seasons in Spain. You also have solar energy that is already increasing as we are heading to the summer. Basically, it's a very common situation in the Spanish market. So we think there's nothing to worry about. But well, you can think, well, you pick 2013, 2014. They were special years. They were not the typical year in Spain. Well, sorry, they were. This is the annual average price since the beginning of the market, more than 25 years ago. And 2013, 2014, they are just right average prices, right average year. So they are not a special years. This is a common situation during the summer, during the spring in Spain. So this can happen in the future. But again, having low prices in the spring, it doesn't mean that the whole year it's going to be a bad year for the renewable energies. Okay. Aside from forecasting, we have a lot of services related and useful for the energy sector. Go to our website and you can see all of them. Let's see now what the futures markets are telling us. Here you will see basically no differences with what we were showing last week, in the last webinar 4 weeks ago. No changes basically in the forward curve for the Brent oil, basically no changes for the gas futures, some decrease in the remaining for 2024. An important increase at the very long term, decreasing prices. This is a change that we more or less expected, but because there have been recently increases in the prices at the very long term that were really not clear where they were coming from. So stabilizing prices at the long term, something that we more or less expected. Basically no changes in the CO2 forward curve, and basically no changes in the electricity futures for most of the countries and most of the year, so very stable. Some interesting changes for the Spanish market, up to 23% for 2034. So 10 years ahead, 23% increase in just 4 weeks. This is not so. This is really something that it's a warning. It's a warning that we usually put in this slide. These are very liquid markets beyond Cal +1, Cal +2. So please do not try to use the forward curve as a forecast for the price, for the spot price in the future, because you can have you can see really strange things like these sudden changes that can really affect your finance model. So just please take a proper price forecasting curve. Okay, so just as a summary, basically oil prices around $83. Difficult, basically no huge changes in the trend expected in the following weeks. Natural gas, we are at the equilibrium price. We have found that the new equilibrium price is around 25 euros per megawatt hour. CO2 prices that stopped at 50 euros per ton. This is going to be a change in the trend at the long term. We are yet not ready to say so. Electricity spot prices stable in the medium and the long term. In the short term, obviously, always following the variability of the renewable energies, and no changes in the much longer term. And just to finish, I want you to already invite you to our next webinar. It's going to be in April, and we will be talking again about energy storage. In the last hour webinar, we talked about batteries specifically. We are going to keep talking about energy storage with Raúl García, director of the Spanish Association of Energy Storage. Thank you, Alejandro.
Thank you very much, Oriol. Very insightful presentation as usual. And now we welcome our colleagues from EY. Marta, when you're ready, please, you can share your slides now.
Good morning.
Hi.
Hi, good morning. Well, on behalf of EY, it's a pleasure to be here today and to welcome everyone to share with us. We are going to share with you our vision of the prospect for the energy markets and the key topics of the sector for this year. Today our team will review main trends and that we see in the market right now. At EY, we have built a portfolio of services to accompany our clients from the development of their projects and operations to their optimization and operation. We have structured our portfolio of services in 4 service lines that you are seeing in the slide. Starting with the strategy and transactions, our team can define with you the strategy, the corporate strategy. And also, as you probably know, we provide M&A services with an end-to-end approach, no? Enter into the due diligence process, valuation, modeling, from speech, opinion, end-to-end portfolio of services in M&A. In tax and legal, and our team can accompany and provide advice on the day-to-day operations of the company. And as you know, it's an area where knowledge and technology are key to delivering excellent service to our clients. In consulting, we provide services from the setup of the operations to the transformation of the company, no? Leveraging in our regulatory knowledge and knowledge of the markets, no? Also, we have solutions for technology consulting where we help and we accompany our clients in the digital transformation. And finally, for sure, you know that our assurance team that are auditors, no? But they also provide a full range of services, mainly around the compliance and risk management. So, well, this is a short introduction of our company. Happy to be here. And let's start with sharing our vision about the main topics for 2014. No, well, we have chosen some of them, the ones where we are more active working with our clients. First one is the renewable development. We see that we are following the objectives, and we are on track of the objectives that we have in the PNIEC, no, in the national plan. However, there's a challenge, an important challenge related to the demand. No, we have seen before how the prices are the electricity prices are impacted by the low demand. Now it's a conjunctural factor, but it's crucial for the development of the renewables and the achievement of the PNIEC objectives, the development of especially the industrial demand, and the development of the industrial demand will come or will be based in the decarbonization of the demand. So this is a key point for us, where our clients are struggling with the decisions to go ahead with these complex projects, no? And related to these two topics, the renewables development and the industrial demand, is the development of the grid. No, some of the or most of the decarbonization projects that the industry has to carry out are or has to have access to increase the capacity to have access to the network and increase their capacity. No, so there's a need to change the future regulation in the next regulatory period, to allow the investment, to remove the limits and to advance those investments. No? Well, we will go deeper in detail later in our presentation, but there are important regulatory changes this year. No, focusing after the market review. Right now we are expecting the capacity markets regulation, or as I said before, starting with the with the preparation of the next regulatory period for the retribution of the grids. In M&A, we will go in deeper in a deeper analysis later, with my colleagues, but we think that the RDL 8 2023 with the milestone extension will have a positive impact in the operations and in the market. And finally, in the PPAs market, well, we continue being very optimistic. I mean, Spain is in a good position. We think that, and related to the industrial demand and the decarbonizations, that the clients will want to remove the volatility of their P&L. So we are quite confident that the market will continue with a positive trend. And now entering into some detail. Well, this is some data for you, to show how we are progressing with the PNIEC, with the national plan for the installation of renewables. You can see where we are now in terms of the capacity installed for solar and for wind. So you see that we have to multiply the capacity, but we are in track today. Also, it's important to follow up the access and connection situation that, as you know, well, could struggle also the achievement of the objectives. If we go to the PPAs market, for sure, some of you are receiving our recap report, where we analyze the attractiveness of the Spanish market for the investment in renewables, and also the PPA index, where we see also the volumes and also attractiveness, in terms of the PPAs signing. You can see that we are in second place after Germany. So and our view is that this trend will continue, not only in the coming months, also in the next years, because of the combination of the installation of more renewables, and the growth in the demand that we expect. Okay, and finally, well, this is only to give you a view, that about this important topic, that is the demand, the growth of the demand, the challenge that we have to allow the renewable development. Well, basically, it's not only one factor. There are multiple factors. It's true that the industry is the key factor, because it's what it will be the key contributor to the electricity demand. But it's also the penetration of heat pumps, also the penetration of the EV and the recharging grids for EVs, the integration of storage that will allow the management of the renewables and the stability of the system. And well, this is our view of the different factors that the sector will need to combine to go through that demand growth. And let's go with the next presentation. Thank you very much. And Jaime will continue with the presentation.
Hi everyone, and thanks Marta for the introduction. My name is Jamie Morton. I'm going to go a little bit through the main regulatory times and what we can expect of the regulation in the following months. So one of the issues that we want to first see, as Marta stated, we are in terms of renewable development, we're in a trend that is quite close looking. They're going to be, we're getting to the PNIEC objectives. However, as you know, there is a lot of tenders that are currently blocked by capacity, the expectancy of capacity tenders to be released. So right now the situation is like, apart from all the projects that are being developed, we have 129 gigabytes that are blocked for those tenders, and we expect it to come. Of those 129 gigabytes, 12 are allowed to be assigned to self-consumption projects. So that's a good sign for self-consumption because they don't have any barrier to develop to the 19 gigabytes object that we have with the PNIEC. And one of the key messages is also that if you are a developer, you want to start a project without getting to those tenders and go to the grid with the regular temporary order discretion, there is only 38 gigabytes available in the grid, and of those 38 is only between 1 and 2 for the transmission network. So those kind of new projects that want to get access, like for example storage, they need to wait for the capacity tenders, or there is a really small space in the grid right now. So that's something we expect that with the fair transition nodes and other those, that it starts to get viable once some of the projects that are right now developed doesn't get the final permits, right? So in terms of regulation, the main issue of this year has been the release of the Royal Decree Law 8/2023 at the end of the last year, and we have divided it in three main topics. Okay, the first one is the extension of the administrative milestones. All of you know that we have a milestone to develop our projects; otherwise, we would lose the access and connection permits. So there was two kind of extensions. The first one is the 6 months extension for the milestone related to the construction authorization, that has been extended 6 months, and a possibility to extend the years that you need to obtain the administrative construction authorization, that is 8 years. Okay, this need to be requested before March 29, 2024. Okay, so that's something we all need to have in mind if we want to access to the extension. Another of the main parts of the Royal Decree Law is the self-consumption. As we have stated before, there's a release of 10% of the access capacity on those transmission network nodes that are reserved for the bidding and the tenders of the capacity tenders. So that's something that we already had stated in the Royal Decree Law 6/2022, but it's being extended for the next 2 years. And lastly, and probably the most important, is the release of the demand access. Okay, for the first time, there's a development of the need to have a demand access, and in case there is a lot of demand in a specific node, there will be tenders for getting that access. One of the main developments of the law, the Royal Decree, also is the request of economic guarantees for the demand side in order to allow projects that are really going to develop to continue. One of the issues that and the things that cause a little bit of conflict in the market is the need to have these economic guarantees. Not if you are a battery, okay? Because if you're a battery, you already have an economic guarantee of 40 euros kilowatt requested as a generator, but they're making you deposit 20 extra euros, okay, as from the part of the demand. And also that guarantee to be cancelled, you need to formalize a contract power with your network operator, contracting at least 50% of the granted access capacity in the period Q1. Why this is a problem? because first, as an storage, you don't need to pay tolls, and secondly, because it's weird that you guarantee you need to cancel an economic guarantee with a contract with a private company. So this is one of the issues that are causing some conflicts in the market right now for the development of storage. And we think that as this Royal Decree law needs to get into a law, this might change in those conversations. Okay. Secondly, we're going to go through the most relevant regulatory change that we think they're going to occur in 2024. As Marta said before, one of the main issues is the change of a new regulatory period affecting the networks, okay, the remuneration of the networks. There's some issues with remuneration of the networks that we think that probably will change for the next regulatory period that will start in 2026. The first one is the remuneration rate that right now is driven by a WACC that is based in historic data. The problem is that that WACC is thought for periods with an economic stability, and as we can see in the graph, since January 21, some of the main indicators like Euribor, consumption index, or the state bond are getting up. So there can be an issue that the WACC is calculated with historic data before that term, and the distributors need to invest and ask for money to the banks in a different condition. So that's one issue that must be thought in those changes. Also, another one is the unitary values that the networks assets are based, because they were calculated in 2012, and we have a law in Spain that doesn't allow us to update those values based in price indexes. So the values are getting a little bit antiquated, as majorly since the increments of the last years on those kind of values that could raise the value of materials in a high way. So for the next regulatory period, probably those values should be reviewed, or even go through a pure audit of the cost model. Two other aspects that might need to be in account is the investment limits. Right now, the networks have a limit established in 2013 that is based in another time and another environment, and probably to get to the new objectives and the networks that need to be developed to accomplish the PNIEC objectives must be released in order to the companies can invest what we need. And probably there will be other aspects changing, like new incentives for the model, or changing other parameters of the remuneration. One of the other main things that we're expecting for this year to develop is the capacity markets. Okay, right now we have in 2021 the first draft of an order of a capacity market. With all the energy crisis that we had the last couple of years, it was stopped, the development. However, the ministry has stated that at the end of 2013 that is a major topic for them right now, and we know that they've been doing a huge effort in the last term to present a proposal of a capacity market to DGCOM and DG Energy to be approved and developed. We expect in 2024. Okay, at the end, in the long term we need to develop a storage and also have a capacity market. So some of our generation plans that give us stability in the networks have an incentive to be there and to be a backup for the renewable development. Getting in other topics very quick, we see 8 things that we all have in mind. Okay. First of all is the offshore conditions. There's been a draft for Royal Decree of the condition of how the offshore is going to be regulated, focusing in the competitive bidding procedures, their economic regime, the access and connection conditions, and their administrative procedures. Also, we expect that for cogeneration, that's really important regarding the industrial demand that Marta said before. We expected that at the end of this month, there is a new framework for the operation remuneration, and afterwards, once that is stated, we expect that also foresee the reactivation of the 1,200 megawatts generation auctions that its first draft was also released in 2021, and we expect that is the time also to think about a new investment period for the cogeneration. Also, as I said before, in the access and connection tenders, we expect that La Lancha to 220 kilovolts is expected in the short term, okay, as it's been already released, the conditions of the tenders, and we're expecting what Miteco is going to decide with the rest of the capacity reserve and the rest of tenders. Also, we expect the reestablishment of the specialized energy regulator in this year. There is also a public consultation regarding its new condition. There is a tax impact that my colleague Javier Garcia Seijas will talk a little bit later, but there is some change regarding Royal Decree Law about the tax impact in the generation. Mainly, there is the return of the tax for energy, and also there is a lot of autonomies that start to release two taxes, mainly Basque Country and Aragon, and we see that is a continuous effect, or we'll see what we can expect. However, apart from challenges, we also have opportunities regarding, for example, the impact of the declaration of unconstitutionality of the Royal Decree Law 3/2016, that is giving opportunities to in the past, those of you that have a negative tax basis, to have a higher tax return this year. Okay. Finally, we have also starting to negotiate the network planning for 2025 and to 2030. That is key to the development of the PNIEC objectives. We are expecting also that the regulator publish the methodology and conditions for accessing and connecting for the demand. Okay, that is aiming to unify aspects related to technical criteria and the reasons why some requests are denied. And finally, we have to have an eye to the reset rate that is going to be negotiated between the companies and Miteco to see its impact on the closer forecast of the nuclear plants. Finally, to give a quick brief regarding the opportunities of granting for the energy and hydrogen sectors, apart from all the opportunities that we have in Spain, it's important that the energy companies also have an eye in some of the European funds that we have available. To talk of some of the most important ones, we have Horizon Europe, we have the European Hydrogen Bank auctions, that the first one was closed in February 8th with 132 bids and 17 countries. We expect that the next auction is going to be in autumn 2024. And also have a look in Connecting Europe facility and the two key funds for infrastructures related with transport and energy projects. And finally, the Innovation Fund, okay, that there is right now a call open for 4 billion, and we probably know that a lot of you will be developing projects. There is at the end of one of our colleagues really specializing in European funds will come with us, so we can discuss a little bit more about these topics. And with that, I will pass my word to my colleague Javier Garcia Seijas, that's going to present.
Hello, good morning. It's a pleasure to be here 1 year more in this webinar of AleaSoft. Happy to share our views regarding project financing for renewable projects. Just 1 second, I will share my screen. No, es que no se I'm trying to make the no, I got it. So I am responsible for the modeling and project finance practices and coordinate infrastructure sector within EY Spain. And I wanted to share how the financing conditions for renewable energy projects are nowadays from our perspective. To begin with, I would like to share some information regarding some tax changes that have been taking place that impact obviously the financing of the projects. In that sense, we have the regulatory framework Royal Decree 8/2023 implements measures to tackle the economic and social repercussions stemming from conflicts in Ukraine and the Middle East, as well to mitigate the impact of drought. This measure hold particular significance concerning tax on the value of the production of electricity tax, the social bonus, and value-added tax. Well, mainly, I don't want to go through all of them, but yes, I think that it's relevant to share and to remark that the tax on the value of the production of the electricity energy, the temporary suspension of the 7% generation tax disappears now from the year 2024, and this tax will be required on 50% of the value of the production during the first quarter of 2023, and on 75% on the same during the second quarter, resulting in an effective imposition of 3.5 and 5.25 respectively. From the third quarter onwards, the generation tax 7% will continue in effect. So this has a significant effect on our projects, existing projects and new projects to be financed. There are also some other changes. I just want to name them. Afterwards, our presentation can be shared, so you will be able to go through them in detail. But the electricity tax, the social bonus of exchange, value-added tax, grid toll, and not yet, but potentially there is an environmental tax in Aragon, which is one of the regions which is has a lot of projects under development on the operation of wind and photovoltaic plants. So all these are relevant impacts on the financial models and the business cases on the projects already financed or to be financed. So now I want to divide the projects that we are seeing in three different categories. One is the projects subsidized by Royal Decree 413 of 2014. Later on, other projects, current projects with PPAs, and Marta told a little bit about them before, and also pure merchant projects and how we approach them. If we talk about the regulated assets, first I have to say that obviously these are projects that most of them are already financed. The thing is that there is some difficulties to be performing sometimes, because in one hand they were I'm talking about projects already financed or refinanced in the past. These projects had a significant leverage in one hand. In the other hand, interest rates has grown a lot. In the other side, the electricity prices in the past were high, so they got all the incomes in advance, and now they are not getting regulatory support, and obviously the electricity prices are low. So all this makes that all those existing very leveraged projects may have some problems of covering some ratios. In the other hand, and where we are active is when our clients are buying these kind of projects, sometimes they are not even financed, and our clients are keeping financing these projects, which are very attractive to be financed if they do not have been leveraged yet. In that sense, I mean, this Royal Decree on 2019 gave stability for the next 12 years, and most national international financial entities are active letter financing these projects. As I said, given the high pool prices in the recent year, regulated revenue to be received in the coming years have declined considerably, especially in some technologies as wind. And as I also remarked before, the downward estimate of future energy prices in case of photovoltaic will negatively impact the financial ratios. As I said, this is something to be considered. And also the interest rates, as I explained before. Having said all this, and for projects which are not finished yet, and our clients are trying to finance, when they acquire, the leverage can be very high, from 80 to 90. The debt terms are 16 to 18 years. The debt service coverage ratio in usually periods are 1.2 to 1.35, and then later on they become merchant at 1.35 to 1.50. Regarding prices and other debt conditions, interest rates are Euribor plus 1.4 to minimum to 2.1, let's say. A hedge of 75% will be required, and the structuring fees are from 1.5 to 2.6. And the debt set reserve account is usually of 6 months. Okay, projects with PPAs. As I said, as Marta said before, these are the most popular ones nowadays. This is increasing trend, and we believe that absolutely it's a need for the future for the project. The thing is that as energy prices are going, the prediction are to be going down. The discussion is when to close the PPA, because sometimes they need the money before, or the financing to start the construction, but the PPA is agreed later on. So in that case, they can have some creative structure where they go with a certain level of leverage, but later on to start the construction, but later on when the PPA is signed, they will increase the leverage and reach to optimal levels. In that sense, if there is a good PPA, because the PPA of taker, the counterparty risk is crucial for the bankability of the project. If that is okay, the leverage can be between 75% to 85%. The maximum debt term is from 14 to 22. That obviously depends on the PPA maturity. The debt service coverage ratio during the PPA can be from 1.15 to 1.30, and then after that, the 1.3 to 1.5 in merchant scenarios. Talking about prices, Euribor plus 1.6 to Euribor to 2.40. Interest hedge of 70 to 75. Structuring fees very similar to other cases, like 1.5 to 2.0. And the debt service reserve account during the PPA in 6 months and 12 months in the merchant period. Finally, so we have much more time just to finish with pure merchant projects. Here I have to say that it's not gaining popularity nowadays. There is obviously some specific lenders who are providing this kind of financing, but most people is moving to PPAs. Here the leverage is lower, obviously, from 55 to 70. Debt terms, yes, are around from 16 to 20 according to the life period. The debt service coverage ratio is less aggressive, 1.5, 1.55 even in some occasions, and then obviously is more expensive financing with starting from Euribor plus 2% to Euribor plus 3.25, and the interest hedge is as always 70 to 75, and student fees around 2%. The debt service reserve account is around 12 months. So that's all from my side, and I now leave this to my colleague Alfredo Salcedo.
Hello, Alfredo.
Yes, good morning, everyone. How are you? First of all, thank you to AleaSoft for providing us the opportunity to be here. My name is Alfredo Salcedo. I'm a valuation partner at EY, and today I'm going to talk about renewable energy portfolio valuation. Given that we are out of time and conscious of people's agendas, we are going to be very executive, but I'm happy to take any questions offline, and you have my contact details in the presentation that will be shared with all the attendants and then by AleaSoft. So moving to the topic at hand, when we have to value a portfolio of developing assets, it is very important to take into account the milestones and complexities during the development phase, because we need to capture that development risk in order to properly assess the value of the assets. Okay. Here on the screen, we are showing a simplified structure of what entails the development phase of the projects. So we start with the land agreement, then we move to the access and connection to the grid, with both permits, grid access and grid connection, being paramount in order to be able to successfully develop the project. Then we've got the permit and licenses. And lately we have had some developments, as my colleague Jaime was telling us, around the Royal Decree 823, which has extended the time for completion of some of these milestones, including the AAC to 49 months, which is 6 months more than before, and the COD by 3 years, as long as you are able to appoint or select a semester where you are going to connect. So after we have performed permitting due diligence and we are able to make sure what is the current status of the projects, we need to also perform a quantitative assessment of the project. Okay, what is its location? What's the number of equivalent hours? What is going to be the power? What type of technology we are going to be using? Is it going to be hybrid? And so on. Okay. With all that, we move to the actual phase of valuing the asset. And here we follow 3 steps. The first step is the valuation of the asset as if it was operating. Okay, we consider the cash flows that the asset is going to generate starting from first day of operation till the end of the useful life. Here we can also sometimes consider if there's going to be a terminal value, given that the grid connection and access can be used for either repowering, which is a big topic now, or it can be sold to another party in as long as there are certain conditions met. The second step on the valuation method would be to consider CapEx and DevEx. Okay, we have the value at COD, but obviously our projects are not there yet, so we need to take into account the cost to build the PV plants or the wind farms, and we also need to take into account the costs to reach ready to build during the development phase. That will give us a value at ready to build, okay? And then we have the third and final step, which is to account for the development risk of the portfolio, okay? And here what we do is calculate probabilities in percentage terms according to the degree of progress that we have seen on the prior slide. So obviously, the more milestones that you have achieved, the higher probability that your project will become successful and reach commercial operation date. Obviously, in order to perform all these analyses, it's essential to have a long-term view on the electricity prices and on the CapEx trends. Okay, lately we have seen how for some time CapEx went up as a result of the disruption in the supply chains, but lately CapEx has been going down. Then last but not least, we have always to contrast this income approach methodology with the market, okay? For that, we use market multiples that we try to homogenize to make the characteristics similar. So moving to the next slide, here we have an example of an approximate range of where PV, COD, and ready-to-build multiples in terms of enterprise value have been moving lately, okay? This range is based on information that is stemming from both public transactions and proprietary transactions analyzed by EY. As you can see, in the last 2 years, there has been an upward trend in 2022 as a result of the high increase in prices that has led to ready-to-build prices in excess of 200K and all the way up to 300, 350. And that has also driven up the value of COD projects up to 1 million to slightly more than 1 million. However, as electricity prices are coming back to more historical levels, around 50 to 60 euros per megawatt, we are seeing a downward trend. And for 2023, there has been a decrease in the ready-to-build multiples between 150 and 180. I would say that's a sweet spot. And for COD projects, barely reaching 1 million in very specific transactions. This has also been impacted by the cost of financing that Javier was mentioning before. As you can see, Euribor has trended up significantly since the first half of 2022, where we were for more than 4 years below zero. And in a short period of time, it has increased almost to the level of 4%, okay? That has had also an impact together with the electricity price in pricing the assets, which obviously have got long-term cash flows, high level of debt, and therefore this is an important topic. So without further ado, and I'm sorry for the overtime, this is the presentation for today. Thank you very much.
Thank you very much, Marta, Javier, Alfredo, and Jaime for that great presentation. And thank you again for sharing this webinar with us. We hope to share it again next year. Unfortunately, we have run out of time. We have already answered some of your questions, and we will answer the remaining directly by email. As Uriel mentioned, I invite you to register to our next webinar in April that we will share with ASEALEN, the Spanish Association of Energy Storage. And thank you again, Uriel, Marta, Javier, Alfredo, and Jaime for your presentations and the audience for joining. Have a nice day.